The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And just catching up on where the markets are right now, we got the S&P is basically flat on the day with the Nasdaq down about almost 5 points right now. We got the Dow down 5. We have the Russell up 6.8, along with gold is down 18 points after that massive run yesterday, giving it back up. We got copper. It is down about 0.5% right now, and we got silver down over 2.5%. Corn's flat on the day with soybeans down 12 points, almost a 1% down move on soybeans. Oil down 50 cents, which is basically a half a percent move. And natural gas is pretty flat for natural gas. Not even quite a usually you get that 1 to 4% move, so a quiet day for natural gas. And we got a euro dollar is up 15 pips. We got pound dollar up 65 pips. So we have Aussie dollar up 20. We got US yen up 22. We got US Canadian down 4 with US franc down 20. Over on the dollar index, it is negative right now. Dollar showing some weakness, but we're not getting the market showing a lot of strength. And the bonds currently ticking higher right now. So we'll see how it all plays up in the end, of course. But right now, it's pretty much where everything is sitting. Let's take a quick look and review at the fundamentals. So we always go through those, check them out, talk about what's came out, what's coming out. And I was reading an interesting story. Actually, my wife brought it to my attention last night. We were talking about, all these new taxes that were added on in California, taxing them even more. And it's literally over 1,000 people a day or something like that. I mean, it's a massive amount, literally moving just to Texas every day. And I don't know if 1,000 is accurate. That's just what this report said. But because that would be a massive influx of people. But anyways, like a lot of people. We'll just put it that way. Maybe it's 1,000 people a week. But who knows? Could be 1,000 a day, I guess. I don't know. But a lot of people just leaving California to do all the taxes, moving to Texas. And of course, I love Texas. So definitely welcome people who are looking to be entrepreneurial and make it happen. Not wanting to pay their state income taxes like they have out there. And, they're raising all these taxes. I mean, even had Jack Nicholson come on and say he was going to move outside the state because he was just sick of paying all the state income taxes there. And, guys, to talking about it's like the effect it could actually have on sport teams. You have a all-star quarterback, coming out and on the draft and, not necessarily the draft, but it was just up for renewal or, whatever. I mean, there's so many different ways you could look at it. But, and let's say they have a couple choices in teams, and, you got San Francisco 49ers or the Dallas Cowboys. Well, let's say the San Francisco 49ers offers you, $10 million, but the, Cowboys offer you $9 million. You could still come out ahead if you end up playing in Texas, And now, I mean, the reality is, like, wherever you play, like, if you play in even if you're a Cowboy and you play in California, you got to pay state income tax for the game that you play there, which is crazy. I mean, talk about a tax return mess. Like every state they play in, if that state has income taxes, then they have to pay state income taxes on that. And if they don't, I don't know. Maybe their state charges them for it. I have no idea. But like in Texas, of course, we don't have income tax. So when they come to play here, our state isn't charging them. And of course, all the home games, which the majority of your games are at home, won't have income tax. And so, I mean, it's just, interesting that it actually could shape sports teams, making eventually, basically states that don't have income taxes could end up getting it, depending on how big they are. I mean, small versus, large, like New York and California, Illinois. But, I mean, it could hurt the Bears, it could hurt the 49ers, so it could hurt the Giants. But just an odd thought of that actually impacting sports teams being taxes being a reason to choose a team. And you're going to love that. I remember I used to have a company in Illinois. I was up there, outside Chicago, the Bloomington Normal area. It's like right close to Peoria. And this was a long time ago, and back in the 90s. And I started up my first company and didn't know anything about anything, was just figuring it out. And it was my first company. I opened it up there and started making some money. And then I learned about, and I sort of I dropped out of grad school because I didn't have time. I was making too much money by my company. I went back later to grad school just to, learn some more stuff. But anyway, so I dropped out of grad school, started the company up. Then all of a sudden I didn't know about state income taxes. I always lived in Texas, and I was like, oh, wow. And so I immediately filed for a transfer of corporation, dealt with the taxes for the time that I was there, and moved the entire company back to Texas. And I was already ready to come back anyway. I just didn't know the impact that had. And it was a rookie thing. I was young, in my 20s, and figuring that out. But it's pretty massive, the impact income taxes have on companies leaving. And I can just see the conversations right now. You're stealing our people because, all this is happening. You're not charging taxes, so now the Cowboys are getting all the players, or just be, an interesting dynamic in sports that you never really think of having. Let's see here. All right, so let's move on to past the sports topic. It's not helping the Dolphins. Yeah, just because you don't have them doesn't mean it's going to help you. But if you do, it definitely is at least an edge. So there's only so much taxes can do. They can only stimulate your team so much. So one of the questions came up is the Tigers didn't there, or statements. All right. So what did we have happen last night? Well, not a whole lot as far as major scheduled government news announcements. But then this morning we had some, movements. So let's talk about a couple of those, and then talk about what to look out for over the next couple of days as well. And let me show you here. We'll pull this up and sort of see how this works out. Let me zoom in. And one of the things I said yesterday, and when I'm calling out the news reports out, this is one of the things I call it because we see this happen, at least several times a month, is where the USD CAD will actually have a bunch of announcements. Basically, the dollar and the Canadian will have a bunch of announcements at the same time. And when that happens, that gives you a unique opportunity to trade the dollar Canadian without necessarily having a directional bias. Okay? So on that, what you could do is you could go in and you could actually strangle using Nadex. And let's just look at how that could have potentially worked out for you. Using the deviation levels to help you pick strikes and things of that sort, and what would you have been looking for. So on the USD CAD, we had deviation levels of one deviation move was 99.68. Okay? So basically we said that should contain 70% of the market movement, or 70%, the expectation that 70% of the time the market will stay within one deviation. Now, we use implied deviation, not standard deviation. Standard deviation uses historical movement. Implied deviation uses the implied volatility of the underlying market's options. I use 16 different options. I extract implied volatility, make an index, tie that into a one-day a deviation formula made for intraday trading. And so right there was our one deviation. You can see that's where it sort of chilled out. If we want to go a little bit higher on the USD CAD, we can see 99.81. So right, let's see here, 99.81. That was our 0.7 deviation level. So if we hit it right there, and then if we go a little bit higher, we can track USD CAD up to 99.90 for our half deviation level right there. Okay. And our settlement price on USD CAD was 1,012. That's what we had on the charts there. So right here in the middle of the charts. And then it did move up a little bit first last night. But we were looking for a move up to 1,034. So on the high side, 103.3, so not too shabby. 103.36, so if you actually rounded it, we actually hit it perfectly on the half deviation mark. That's how high we said it would, like the first deviation mark. And then what you can do is you can actually use this to help you in your trading for picking your stops. So you can target like a half deviation, whatever. So let's look at the price of 830, which would be 730 Central. Right here. Okay. So actually would be this price right there, because that's the closing price of this bar. So if we're looking at that bar, and we're looking for like a half up, a half down move. You could also be looking for a one up and a one down move. I'm usually looking for a one deviation move whenever we have a lot of news lined up. And this morning there's 1, 2, 3, 4, 5, 6, 7, 8 announcements happening combined at the exact same time on the dollar and Canadian. The Canadian had a GDP that came in a little better than expected, which is obviously the most important number that they have, that they release. The U.S. had unemployment that came in worse than expected, unemployment claims. So the two combined is just a perfect recipe for a drop in the USD CAD, because the bad on unemployment, drop in the dollar, and then the bad on the Canadian, strengthening the Canadian, and then just boom, down. So right there you get that nice combo. And so how would you actually apply that if you're trading on Nadex? Okay, there's a couple different ways. So one way is, notice, and here's something I want you to see too. This happened, but it didn't happen in 5 seconds. Like a lot of news announcements, when they come out, I mean, they're out and they're done. So you'll get that and you're like, okay, negative dollar, positive pound, so negative USD CAD. Because when you sell the USD CAD, you're selling the dollar and you're buying the Canadian. If you buy the USD CAD, you're buying the dollar and selling the Canadian. So you're short, okay? Basically, in your mind, you think this thing's going down, you think it's going to a deviation, and literally this is your one deviation mark right here. That's what we're targeting, okay? So knowing that, you can go in and you can use the Nadex box spreads. So if I look at the box spreads right here, this is the way that I pull them up. You can also pull them up in the actual Nadex platform itself. And in the Nadex platform, what you'll see, we'll go and say, okay, I want to look at USD CAD right here. And then you could basically pick the trade that you wanted to do. Obviously, it'd be a little bit different than right now because we're already down a deviation. But just to give you an example of how you'd look at it, what you do is you'd find one that has a low, basically has some time to move, okay? Because when this happens, usually it does take a little bit. And it did take a few hours for it to get down there. So 8:30, 9:30, 10:30, 11:30. So it took 4 hours for it to move. So you actually need some time. And you would have had that because there's spreads that actually come out that start at 7 a.m. or 8 a.m. Eastern time. So which would be 7 a.m. Central. So you would have had spreads that started literally just a half hour before the news announcements come out. They go all the way till 3 o'clock. It's plenty of time to take those trades. And we'll look at which one of those spreads you could have picked and where you'd be at right now. Right after we get back from commercial break. Stay right there.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And I'm going through just a few different things. We're looking at some things, but one of the things we're going to do first is we got, let's see here, we are going to dip into the bucket and find out who our next Great Panther Silver winners. We're giving away silver bars. And so make sure if you have not entered to win, hop on over, click on Super Silver Giveaway, click on that, fill in the form, click Submit, and that's all you got to do to get in. Okay? And so I want to go ahead and make the announcement. We got a name right now. We got Vincent from Longmont, California. So congratulations, Vincent, for winning a half-ounce silver bar from the Great Panther Silver Giveaway from TFNN. And again, Vincent, congratulations. Please go ahead and give us a call at our listener line at 1-877-927-6648 today, anytime before 6 o'clock Eastern. Okay? And that's 877-927-6648 today, anytime before 6 o'clock Eastern. And so, anyways, if you haven't got in, there's still time to register. So go ahead and make sure you hop on there and take advantage of the free silver, giving away free silver bars. Pretty simple. Just click and submit. And again, congratulations. All right, so let's go ahead and check out where we are at on a few other things here. We were last on USD CAD and talking about different ways that you could trade it. And so let me pull it up, and I'll show you actually how to do that, okay? Right over here. So if you go in, and you can do spreads and you can do binaries. So I'm going to show you two different ways. Okay? So on the binaries, if we're targeting, remember our target here is 99.69, the exact target. If we go in and we look at our deviation levels, one deviation, USD CAD, 99.68. Okay. So now we come over here, and we can look at where this one's at, and pull that up. Let me pull up in the other one for you. And so we'll pull that one up on here. Where's that? Sorry, I want to pull up the spreads for you. Give me 1 second. There we go. All right. So now we got that in there. I want to actually click the buttons on there. I don't want to mess you up. The best way to do it. So we got 99.68 as our target there. And what will happen is whatever trade you have on, they're going to deduct the risk as soon as you put on the trade. So all your trades combined are going to immediately deduct out of your balance. Okay? Now I think this is actually just a good tip. We'll stop for a second and go on this tip. One of the things that I think confuses, I talked to a trader about this yesterday. One of the things that I think confuses traders the most is they get these, as soon as your account's, like if you don't close your thing before expiration, it'll settle, and then they'll do a payout to you immediately, within seconds. And it'll say like, hey, your payout is $100. And you'll think, I made $100 on the trade? And, well, you didn't make 100. Okay, if your risk was 20 and your payout was 100, you made 80. So what will happen is you'll see a $100 credit to your balance because they take all of your open positions. Like right now, I have a bunch of open positions on. So on my, well, not right here, this is a demo, but in my live account, I have a whole bunch of open positions on. And the more positions you have, it's going to pull your account balance down. But when you go in and the positions close, it'll refresh your balance. So it makes it really helpful. Okay, so let's go in here. Let's look at 99.68. But yeah, just to understand, when you get the payout ticket at settlement, if you didn't close early, that's going to be your risk and your potential reward. Now, on the binary, it's going to include your reward. On a spread, it'll be your profit or loss. So if you risk 20 and you get a payout of 10, that means you got $10 back of your risk that you lost $10. If you risk 20 and you got a payout of 20, that means you got your $20 risk back. If you risk 20 and you got a payout of 30, that means you got your risk back plus you made $10. And it's real easy to calculate, and I go through the basic stuff there inside the TFNN member diagnostic section. But if we go over to 99.60, 99.68 or so, right here, and we can even check out 99.80. So that's ideally you like it to be a little bit, at or above the deviation level because a lot of times it'll hit those levels and just bounce right off, as we've seen so many times. And so you can go into one of the cool features is you can open up a chart and look at this. This is really good for learning and understanding Nadex. Okay. Is use these binary charts because you can go in not to trade, okay, but use the binary charts in order to basically see how did the binary move, what would have been priced at this price if I would have done this, and it helps you learn a lot. And so what I'll do is I'll show you where you would have sold at, where you could have bought back at based on this move from this morning. And again, we called this out, so you knew it was coming, all right? And I'll show you if you did a strangle how it would have turned out. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, here, folks. So now we're going into and we're looking at the potential way to do this USD CAD trade. And when I'm teaching you this, it's not just like, oh, he's doing market commentary in the past. Yeah, I am, but I'm also teaching you for the future. Next time there are 8 USD CAD signal, like things happen at the same time, and I probably called this out 3 or 4 times in the last month, just on this one trade, you are ready for it, okay? So like yesterday when I was saying USD CAD, strangle the USD CAD based on the deviations tomorrow when all that comes out. You know, then it worked. I was looking at, strangling gold on the ADP and FOMC the day before. It worked. So there's, certain markets you can do at certain times. And I did an Australian dollar one yesterday. That one didn't work. But, I mean, risk $20, make, 20, 30, 40, 50 bucks over and over and over again. And, win more than you lose, and it comes out pretty nice. And, again, that's if you're strangling. If you waited, you could make more. So, and it's all, like, you're not just getting out at, like, 40. So, I mean, you could take it further. You could do whatever you wanted to do. But just, the simple way to trade it is to get out like around $45, $50, depending upon if you're buying or selling. So let me show you what would happen, okay? So we go in on this trade, and then at 8:30 is when the news comes out. So I think they even have they just have horizontal, they don't have verticals. Okay. What if they do a vertical trend line? Right here. There we go. We can sort of do our own little... It's about 8:30. Put our own little trend line on here. And then we can go on and go, okay, what about one deviation up? So let's go ahead and look at a strangle, okay? So we got gold, one deviation up is going to be up to 1694. So we got that one. So, not 1694. Sorry, not gold. I was just talking about gold, so I got confused. USD CAD up one deviation is going to be up 1.056. So, ideally, that's only 4 ticks away. I might be looking at that one. I'm going to look at the 1.040. 1.0040. Because again, I do like it to be inside the deviation if at all possible. And I like the risk to be obviously as low. Who doesn't like the risk, right? To be as low as possible. So, okay. So yeah, we got the risk reward that we're looking for on the trade. Alright, and then what I'm going to do is I'm going to zoom in to the part that we actually need to see. Get rid of the part that we don't on both of the charts. Alright. And then something else you can also do is you can go in here and you can edit the settings, and I can say, well, this one I'm going to buy, so I can say, show me the ask price, okay? And this one I'm going to sell, so show me the, bid price. That way you're really seeing, what would the price have been at that time. And so if we go over here to, about 8:30, right there, 8:20... 8:30. So right when the news is coming out, then you can see a lot of people actually are doing this trade right here because they're starting to move around. And I do recommend, by the way, on news and stuff, you're getting in like probably 10, 15 minutes easily before the news announcement because implied volatility will rush in there and make it more expensive. So anyway, so we got basically you could have sold this for $90. All right. So the maximum value of a binary is $100. $100 minus 90. Okay. $10 risk. $10 risk, $90 maximum profit potential if held to expiration. I don't recommend you hold to expiration. All right? Well, I'll talk about how to close it out. So that's your sell. Okay, so $10 risk. What about your buy on the upside if you're strangling, if you're not waiting for the announcement, seeing it's positive and then taking it? You can do that. Yeah, see, this is, premium rush. Crazy stuff going on. People firing off orders that have no idea what they're doing. Some crazy stuff going on. That's major implied volatility coming in. Right here, check it out. We got a report, and there's probably some of this is Newsweek, so like little spikes happening. And we can see basically you could have got it for about $20. So, maybe $20 at most risk, right? If we got in right at the right time, right before, about 10 minutes or so before. So $20 to $30 risk, $10 risk if you just took one side, $30 risk if you took both sides. And then you're going for the deviation, so you're going to want to get out right around 50. I like to buy back at 57. If I buy, I like to sell at 43. But these trades work a lot. And so if I can get anywhere close to a 1-to-1, then I'm going to be looking at it. If I can't, I'm either 1, not going to do the trade. Okay. 2, I'm going to go for a shorter expiration, but also a shorter move. Or 3, I'm going to go for a little bit larger move. So I may hold it longer or whatever. It depends upon exactly how I want to trade it. So there's different ways to do it. That'd be about, like I said, somewhere around $30, $25 to $30, depending upon exactly when you got in. And you could have got out, basically made $25 when it moved down and hit there. That's a 1-to-1 risk-reward ratio, not being directional, completely news-based. And some of the other things that people a lot of times don't notice is, let's say you put the strangle on, but it doesn't move right away. But you're like, this is bearish news, okay? Get out. You put it on for $20, you're short now. You're like, hey, this thing's going down. And so if you want to go directional after putting the strangle on, and sometimes you might want to do that because maybe it'll just take off, and so you don't want to miss out, okay? But the news comes out, it's all negative. You're like, well, then get out of the trade. You can get out of the trade for, $5, $10 loss on the trade. Not a whole lot had happened because it took a while for the news to actually move. And then you actually make more money on the trade. So now you basically, instead of risking, say, 25, you only risked, let's say you took a $5 loss on that. Let's say you took, basically got $5 back. And, now your max risk is, somewhere between $15 and $25 on the trade. And for the potential to make, $20 to $25 on the trade. But basically just going in and buying and selling a strangle. Pretty simple. Okay. Now, let's go over here and look at the spreads. And let's check out the USD CAD. Okay. And then looking over here, we got. All right, so what we're going to do is go. Okay, if I wanted to, one, I'd be focusing on the longer term expiration ones, like the ones that expire at 3. And I'd have to focus on these right here, simply because this right here would not have been available back then, because this is a 1 to 3 o'clock. And I simply know that because it's wider. So all the 2-hour ones are 100 ticks wide, and whereas the, I guess you call them dailies, are 200 ticks wide for US Canadian. And so in the US Canadian, I can go in here and I could be looking at literally strangling with these two spreads. All right. And what that does, it gives me a floor, and actually this isn't a straddle, it's a straddle, because my floor and my ceiling are at the exact same price. Okay? And I could go, okay, well, what would that have cost me if I would have got in that trade at that time? Would it have been worth it? Would it not have been worth it? The big thing is, like, where was it at when that one came out? And so what I'll do is pull that up, and we'll actually look at the different options that were available to you and see, you know, was that the best option? Was there a better option? Well, basically, right when the news announcement came out, the US CAD was trading right here, okay, at basically 1.009, all right? So that's where it's at. I want to get my floor and my ceiling as close as possible to that price, 1.009. The further away it is, then, you know, basically the less I can make on the movement, because I'm going to have more premium or more actual real value on one side or the other. And so we got 1.009. We were looking at it right here. That puts it at 0.9970. Puts it way out of the money. We're going to have to give it quite a bit here to go here. So sometimes the spread won't work. Let's go ahead and look at the actual spreads on the charts and see how they would have turned out. So if I go over here, I just go to Forex Bull Spreads. I go to USD CAD. And I'm going to go to just basically it says daily. That's the master. The really wide one is called the master spread. And that's like trading the underlying market. I mean, there's no premium or anything in there. It's just less margin. And but you want to use, basically, you're going to have to stop manage your risk on that because it's so wide. Whereas these, you have the floor and the ceiling really protecting you very well. You still cap your risk, but these are better. All right, so USD CAD right here. We're going to go in. We're going to look at these two. So what would happen if we open both of these charts? Okay. And then we can see, because there's going to be a cap on risk on one of them. Okay, because one of them can only use money below, like in this case, 0.9930. And if you remember, we had a profit target earlier, right? And that profit target was 0.9968. So 0.9968 and 0.9930, that doesn't work out real well for me, because that basically means that, let's see here, if we go in, we do a ceiling of that, and 0.9930, let's go one more higher. That'll work a little better. All right, so here we go, because this is just, if I buy this and sell this, then there's not a whole lot of potential profit for me. So I want to pull up all three, and I want to make sure you understand the three different spreads and your three different choices on this trade. The spread analyzer, by the way, does all this for you. We're just going back in time, so that's why we're having to pull up all this stuff. If you use a spread analyzer, you don't have to do any of this. It's just there. So it makes it very, very simple. All right. So we're going through. I got all the spreads basically from highest to lowest, and their actual price charts on here. And then let's see if this one even goes back far enough. We're not even enough historical data on that one. Let's see here if we can get it to load a little bit more data for us. All right. So what we would have found out, and let's go ahead and look at what the distance to break even is, and I can just tell you, because right now I'm not getting the data I want on the charts. That's why I prefer the scanner anyway. So the premium that we're seeing right now is literally, between, basically it's about a pip. So we probably have, let's just say we have 3 or 4 pips, and we're off of that. Then we're going to want to easily go in and pick the closest ceiling and strike to that. So if we compared a similar one right now, here's what we would do. Sorry, I know that wasn't the best laid out example. I was just hoping we could get a good one on, but it's already moved so much, it really does limit our risk-reward setup there. So right here, if we go in and we can get one as close as possible to the floor and the ceiling, then we're basically looking at risking on this trade, say like $15, and on this trade we're looking at risking $5 or so, because the problem is where our floor and our ceiling are located. See, like, that one's like further out, so there's like a dead zone, so you don't want that. Then we can go down here, find this one, see if that works better. That should do a nice crossover for us. Okay, so this trade works out. You have very small risk. I mean, you're looking at $20 risk on the trade. You have an $80 profit potential. And this is if it moves down to 98.80. And we're targeting 99.60. So we're not getting a massive profit on that. But we'd have to basically move this up, because this is like where the market is right here. You basically would max out this entire trade, because you'd almost get all of that deviation on this one deviation move. Let's see, the full deviation that we're looking for in USD CAD, it's about 44 to 50 pips. So you would have got about $50 for your $20 risk on the trade. So the payout would have been $30 on a $20 risk. You actually would have made more money doing the spread this morning than you would have done in the binary. And I know, like, the whole scenario I went through was like, what are you talking about? I can hear myself being confused. But yeah, that's live radio for you. But what I want to show you is, if you use a scanner, then all that stuff I was trying to figure out to go backwards in time doesn't even matter, because you see it live. This is updated from the exchange real time every second. You're actually seeing the real risk reward on a trade. So here's a trade right now that's a $20 risk. It has an hour and 10 minutes. It basically is going to need to make $16 on one side or the other. If it moves up, it's going to have to make $16. If it moves down, it's going to make $5 for you to be break even. And what that'll do is it'll, after that point, after it moves 15 pips, then you're locking in a nice profit on the trade. So straddles are done on spreads because they have the same floor and the same ceiling. Okay? Strangles are done on binaries because they have different strikes. Both are pretty simple to trade. You can make more money on a big move on a spread. Okay? You can lose less money on a small move on a spread. Alright? You will make more money on a, I'd say, medium move on a binary. So, and the reason I say lose less money on a small move on a spread is because a spread, if you do like out of the money spread, then it has to move more for you to actually profit. Whereas a spread, it could literally just move like 3 ticks and stay there all day, and you'd be just fine. And you get all your money back, and you may even make a couple bucks on the trade. If it moves, medium amount, then you still make some money. Maybe not as much as on a binary, on that small, maybe like a 20 pip move or whatever. And then now if it moves even further, then the spreads get wider and wider and wider. And so, for instance, on here, just to give you one example, okay, we got a couple trade examples. That's $40 with the potential to make 156. You can't do that on a binary risking $40. This one risks $5 to make 192. Now that's a big move that'd be required for that to happen, but it can make more money on a bigger move. So go ahead and stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome back here to the Diagnostic Trading Hour, and going through a few different things here. But we just laid out basically the string there. So what I want to do now is give you some, potential trades to go out there and demo. If you haven't got an account yet, hop on over to tfnn.com, click on Nadex, okay, and click on Create Account. You can get a live account. You can fund it with $100, and it takes about 5 minutes to do it, okay, from beginning to end. For a demo account, click on Our Products, click on Demo Account, fill in your username, first name, last name, phone number, email address, click Apply for Demo, and then you'll be able to, like in a matter of seconds, you'll get an email with the password. You can log right in, and you can demo trade it, and you can just sort of see how it works. And if you want to know how to get that demo extended, just email me at dmartin@tfnn.com. I'll be happy to help you out. And email again is right there on the page at TFNN in the contributor section. Now, let's go ahead and check out what do we have coming up. We have Aussie dollar coming up tonight, and with the the PPI. So also it ought to be pretty volatile. China has their manufacturing PMI coming out at 8 o'clock. So obviously being very close to each other, that's going to have an economic impact, and that'd be a deviation move I'd be looking for on the PPI. So it'd be definitely a strangle play, 7:30 tonight. Deviations update at 7 o'clock, so just in time. On the website, they'll update at 7. And then we got so once that move happens, you have another chance on the pound at 4:30. They're going to have their manufacturing PMI. So there's another easy, simple strangle play. Okay, 10 minutes before the news. And using the deviations. So, and then at 8:30, the U.S. is going to have their unemployment rate, non-farm employment change, coming out. And by the way, Europe also has their unemployment rate being released at 5, but it's not as impactful. So it's more when you're looking at German and Italian and Spanish unemployment rate. That's a little bit more impactful. But anyway, so back to 8:30. The United States have their non-farm employment change and unemployment rate, and this will be coming out. So that's either going to be like an S&P 500 or a Dow trade or gold trade would be the ones I'd be focusing on for doing strangle on those releases. It's the economic impacts, and here's the reason. Okay, the Fed is pegging what it's going to do with the dollar to unemployment. Okay, so it's saying when it gets down to 6.5%. Then we'll look at backing off the easing, and all this other stuff. So that unemployment rate has a pretty big impact on the dollar itself. And so that's the number, so it has a direct impact on the dollar. Then a way to trade that is to trade gold because gold is priced in dollars. So as the bond market moves the dollar, that'll in turn, of course, move gold. So that's sort of how we use the whole ADP thing too as well, because of the unemployment effect on the dollar because of the Fed funds things that happened. And then at 10 o'clock you have ISM manufacturing PMI. So if you want to go for one more trade, I'd be going for maybe a half deviation move on that. If you're not already out of the other one, and or if you are already out of the other one, I wouldn't be adding on at the same time. But if you're already taking profit on the other one, using the same strategy I just went over today, like go in, take profit when it hits it. And it may go up, and it may come back, and you might hit it on both sides. Okay, but the ISM right there, it can be another great trade to go in if you already took profit, and maybe do like a half deviation play because you have less time till the end of the day. And I probably wouldn't be doing gold on ISM. I'd probably be focusing just on actual like U.S. indexes, and I would focus on either the Dow or I would focus on the S&P. So I would not focus on the NASDAQ for manufacturing PMI. All right. I hope y'all have a great day and a safe day. I will see a bunch of y'all in Denver, and I'll be flying out. I'll see y'all in Denver on Saturday, and look forward to seeing you there. There's one more report I want to tell you about. Aussie dollar, 7:30 Sunday night building approvals. Got another Aussie dollar trade you can strangle, okay? I'll see you on Monday. Bye.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.